Hello, it's me, Richard. Today is Tuesday, January 5th, 2021. Hope everyone had a great day. Weather was really nice out here in Los Angeles, California. First of all, I just want to thank everybody for the comments that are posting on my channel. I saw some comments. It's not really making sense to me. I'm not promoting any comment that is listed in my comment section. It appears to be scam related. I'm going to delete those comments, but please do not heed any attention. I don't know why this kind of activity occurs. It's really sad. It's someone out to get someone just for monetary, self satisfaction. Scamming a buck here and there, hurting someone else out of their hard-earned money. I'm not for that at all, and this is why I have my channel. I'm trying to take my life experience, my honest experience, my sense of reality, and share that with you. With crypto, Bitcoin, Dogecoin. I know that it's people are going to get hurt. Investors are going to get hurt at some point in time. But going back to my comments, if you're seeing my video, please have some self-respect and do not post any scam-related comments. I will delete them, and I'd rather have you not watch my channel. I don't need it. But that being said, I wanted to move forward with my Dogecoin analysis. I did want to talk about an article regarding Bitcoin as a limited supply. I did always reference supply and demand, risk and reward, and along those guidelines, how it relates to Bitcoin or digital cryptocurrency. So also in my next several videos in the future, I'm going to get more involved. I'm going to provide videos about stocks, investments. Tesla is doing very well. I will get into Tesla later on. Please give me some time. But for today, I really thought it was important to discuss Dogecoin. And with Dogecoin, you can see that it's already 8:14 p.m. Pacific Standard Time. It's been holding steady. It's unbelievable. It's truly it's really going steady, strong, and it's hovering between 1700 all the way up to 1850 throughout this whole day and from yesterday. And it did take a dip at 1 o'clock, 12:55 a.m. Everybody was asleep at that time. It went down to 1687, and that's not bad because no one's hardly trading at that time of the day, and it took a dip, and it wasn't that bad of a dip. But throughout the day, it's there. Dogecoin, I said this before, Dogecoin started out maybe about 5 years apart from Bitcoin. And, for whatever reason, a lot of cryptocurrencies were starting out during that period. It's getting stronger. It's not an exact science. I would say it's not, because the programming that goes into blockchain keeps improving. I have my own criticism about blockchain. I do believe it's open to manipulation and corrupted files, and that's my opinion. When you look at blockchain and how cryptos are based on blockchain, monetary value from the cryptocurrency are pegged into that blockchain technology. And one of my concern is, what's to say that the monetary value tied into blockchain, the underlying program for that cryptocurrency, for example, Bitcoin, that monetary value, is it being reflected correctly? Program wise, I've taken program courses in the past. I got a bachelor's of science degree in finance. I had to take programming classes. I know what they're all about. It's still at its infancy. Programming has been around since World War II. Computer technology, they used to be on reel-to-reel tapes. They used to be on punch key cards, stack them up, you put them in a certain route, you run them through a card reader, then it goes to a tape. The tape would spin and takes hours and hours just to read the cards and try to spit out an answer to what your question is. So, garbage in, garbage out. If you put in the right information to a computer software, your program, your software, if it's garbage in, it's going to be garbage out. So I think that is, going back to my college, I took Fortran, COBOL, BASIC. Those were rudimentary programming languages. I have not taken any coding where softwares that are being utilized by Facebook and Google. I haven't done that. Although I would like to get that done in the next, maybe another 6 months from now. But what I'm trying to say is that there are weaknesses in blockchain. It's stack to stack. You stack up the programming, and what's the key to success in blockchain is that it takes the users to verify the data. So more users verifying data, then it makes the block of that chain more true, more 100% reliable data. But without having multiple users verifying that blockchain stack to stack, then the blockchain could be open to corruption and manipulation. And that's my biggest worry. So that being said, I like Dogecoin. It's holding strong. And the reason it is, there was a comment made, we can't even get 2 cents out of this. Well, it will hit 2 cents. I have a feeling it will hit. I don't have a crystal ball. I don't know what the future is, but at some point in time, in the near future, it will hit 2 cents is my gut feeling. It's my gut feeling, and that's mine alone. But for it to reach $1, it takes massive amounts of money to go into Dogecoin as a global market, not just a specific country. It would take, and we'll get into that. I'll show you what the market is. So, the market cap for Bitcoin and Dogecoin, but it's doing wonderful. So it's 820 and it's sitting there, 1832.29. Okay, so moving on. I wanted to get into this article, Bitcoin Bulls. This is on Yahoo Finance. It's out of a Bloomberg article, and it says here, but Bitcoin bulls should fear its other scarcity problems. Okay, so what's that saying? What this article is touching about is, I believe, is the closed source that Bitcoin faces, which is all this money that's going into it is pushing up the value of the unit. But you can see here that, looking at all the equity markets, you have Brent crude oil, NASDAQ ETFs, electronic transfer funds, Vanguard ETFs. Bitcoin is 4th on this ranking from Bloomberg. It goes down the list. Hang Seng is another one. Then you can see there copper, which is interesting. It's a commodity. And then further down the line, you have gold. Gold shares ETFs. I love gold, and I really do love silver. I've been, you know, I love silver. I love silver coins, U.S. silver coins, Morgan silver coins. You know, from the 1880s, 1890s, the peace dollars. You know, buy and hold. So you can't go wrong with silver and gold. It will don't go into it thinking that you'll buy it for $2,000 and it's going to go up to $3,000 an ounce around the corner, and you're going to make that kind of profit. It's going to rise, and how long it stays at that value is a completely different story. The United States used to have a large holdings of gold. You know, it used to be held in Fort Knox. Now they're in private places where nobody knows about. Gold is very important to back up the currency. And I read a report that gold has been sold by the U.S. To other countries. I know Saudi Arabia has bought a lot of gold because that they know that oil in their economy is short-lived. After maybe another 50 years. Maybe, you know, EV cars are coming up around the corner, you know, in the next 10 years. People are not going to need oil. But oil is very important. I do see oil being around for another 100 years. So, you know, there's a lot. We use oil, petroleum for rubber and for other products. But at any rate, there's another thing. I just want to show you the market cap of how Bitcoin fits into the total world markets. What I want to show you right here is cryptocurrency is very small. It's $884 billion. I think the number has gone up to over 900 billion just within the last couple of days. Gold is 3 trillion in market value. We have equity, world equity market. That's $103 trillion. And equity is stock. Then there is securitized debt. Securitized debt is bonds, notes that are securitized by a collateral, which is the bare bones of that debt to give it a value. So what I'm trying to say is that, you know, securitized debt and non-securitized debt. Non-securitized debt would be credit cards, you know, the credit cards, line of credit that doesn't have the house as a form of security to back up that line of credit. It's you know, it's an open-ended credit where you can borrow up to a certain limit, but it's open-ended. You can go there, you know, to your bank and withdraw money in intervals for whatever amount you want, up to a certain amount. So that's $114 trillion. So I'm trying to give you an idea. So when you look at cryptocurrency, it's huge. It's a huge market. Dogecoin and Bitcoin falls into this category. So if securitized debt, which the Federal Reserve is utilizing, you know, the Federal Reserves are into debt buying, selling debt to other countries. That's $114 trillion. You know, it's almost, cryptocurrency is almost $1 trillion. $1 trillion in dollars, which is huge. It's a lot. Moving forward, I'm sorry for that lengthy discussion. I do want to touch about one part of my discussion here about fiat money and what money is. So what is the difference between fiat money and money? There really is a difference. So the fiat money is a physical money, paper and coins that you carry in your wallet. It's a form of currency that you can buy anything over the counter, grocery stores, gas stations, even paying your utility bill at the counter. Money is different. Money is a form of currency that represents the intent to pay, such as a check. So if you write a check, that would be money. So then it goes to the bank, and then the bank transfers the value of that check to the payee. So both fiat and money are backed by something. It is. I wanted to say here's an important statement. Without any backing, they would become completely worthless. That goes to my whole concern about cryptocurrency. What value is there? I talked about gold and silver, and then fiat money. Fiat money is a form of currency. It's backed by something. But could you tell me in the comments what you think cryptocurrency is backed by? My opinion, there's no backing to it. But that's my biggest concern, because at some point in the future, I do not know when, it's going to crash. And the only thing that's keeping this boat above water is the quantitative easing from the Federal Reserve, and also the need for governments outside of the United States to put their money where it's more safe than their own banks. And that's true. Other countries cannot even rely on their own banks. Venezuela, it's very interesting what's going on in Venezuela with hyperinflation. You can go into a store and buy a soda for, I don't know the name of the currency there. It could be $8,000 at 11 o'clock. You can go back to that store, and the clerk behind the counter will say it's $12,000. And you don't have that extra $3,000 in Venezuelan money to purchase that soda. It shoots up from any minute of the day, 15-minute intervals. It could be any intervals. You go into the store, you buy a commodity, you walk out, you go back there in an hour, and the price shoots up another 3,000 units in Venezuelan units. So that's hyperinflation there. Their banks are shattered. So a lot of these countries that have a dysfunctional monetary system are putting their money into cryptocurrency. Okay, I wanted to move forward because this is getting a little bit long, and I know there's an attention span with my audience. I want to talk about look at that, the global market cap. And I did touch about global market caps, which is important. It's all about macro economics and microeconomics. Macro is here, what you're saying here regarding cryptocurrency. Micro would be what the individual investor is, how they're investing their money. So here it was, Bitcoin today, January 5th, is at $631 billion. Now, could you tell me what it was yesterday? Because I've been doing these videos for the last 4 or 5 days, and I touch upon this in my videos, and I hope everybody is following with me on this, because I'm trying to, bring focus to what really is on a worldwide basis, Bitcoin, how it's affected by the global market. And here you can catch this on CoinMarketCap. So yesterday, to answer the question, it was $595 billion and 732 million. Okay, that is yesterday. Today, $631 billion. So where did that $40 billion come from? I don't know what the answer is. I really don't. You've got to ask these kind of questions because, look, you got to ask yourself these kind of questions and really think about, if you're investing in crypto, I said before, it's controlled gambling. You you've got to ask these questions because it's your money. I don't think that people are wanting to throw away money if this crashes. Look at this. It's 35,000 per unit for Bitcoin. Why? I do not know what the answer is. What I said earlier in my other videos is that as the amount of demand, the money that goes into these units for Bitcoin, more of it goes into it, then the price goes up. In an algorithmic way. It's controlled by computers. Okay, you don't have access to these computers. I don't. I'm just observing it on these charts, and I just wanted to share this with you. Okay, now let's go to Ethereum. Like I said, it was like $600 at the beginning of December. Look at it. It's $11.20, and even the market cap, I believe, it shot up about $20 billion. Let's see what it was yesterday. I hope it's on my chart here. Yeah, Ethereum was 119 billion there. So that was yesterday. And right now it's 122. So it went up $3 billion. That is a lot of money. Okay, so then all of this Bitcoin, all this cryptocurrencies, you can see there. You can Google this up, pull it up on your internet, on your computer. But I just want to show you one last thing. Dogecoin went up ranking. It's hovering around 1 cent. Look at that. It went up on ranking. I think it was like 34 yesterday. It's up, or I think it was 30 yesterday. It went up to 29 on the ranking scale. So what it does is that based on all these information here, these criteria, calculators, the unit price, the percentages, and the global market cap, it ranks it up according to its ratio compared to other cryptocurrencies. So here it's $1,274,000,000. Okay, so anyways, I wanted to show you that chart where the graph of how cryptocurrency falls into the world markets for investments. Gold is way up there, $3 trillion. Stocks is like hovering a little bit above cryptocurrencies, and that's really unique because I think the number here for crypto is about over 900 billion today. So it's almost catching up with stocks, the value of stocks on a world basis. I'll do another video about the difference between stocks and cryptos and securitized debt. I'll go into M1, M2, M3 money, the velocity of money. I can't do it as soon as very quickly, but hang in with me. I appreciate all the views that I'm getting on this channel. I'm really trying my best to educate. I'm not a financial advisor. I'm not advising anybody to invest in stocks, cryptocurrencies, whatever. This is purely for entertainment value. And I'm not a financial advisor, but like I said before, I do have 30 years experience in accounting and finance. I know it, to its bare bones, So money has always intrigued me. It's a way of putting food on the table, putting a roof over your head. It's a tool. Money is a tool to buy the things that you need. But I'll get into what I discussed earlier just about a couple of minutes ago. I'll talk about hyperinflation, which has been my biggest fear for the last, especially for the last couple of years. I mean, I would say for the last year since the CARES Act with regarding hyperinflation. We've gone through stagflation. I'll discuss stagflation too in my future videos. But please hit the like button. I really appreciate it. I don't know why I'm getting the thumbs down button. I'm truly trying to help everybody out here. But it's a democratic country. If you feel you have a need to hit a thumbs down button, I still appreciate that. And leave me comments. And please avoid the scam comments that are being left on my channel. If I missed any that I haven't deleted, please let me know. Thank you for such a great audience, giving me your valuable time, and I'll try to produce a video tomorrow. Thanks, and have a great day. Good night.